All right, guys, good morning and happy Monday. We are back to work. So we'll get it kicking off here, guys, for the Monday, June 6th pre-market prep. So a few things I want to discuss here, guys, and a little bit of a new layout. So I'll go over this real quick. In the main screen here, I've got my typical daily chart. Got the 21 EMA. I got my Keltner channels. I got the squeeze. All things you're all familiar with. Then we got the new indicator, the big three bars. Up here to the right, I've got the multi-big three labels. So for example, the S&P futures, no sell signals, and we actually got some buy signals on the 30-minute and the 15. And then over here to the right in the bottom, I've got the multi-squeeze tab. So a little bit of a preview there. But here's the thing, guys. I don't think anything changes bigger picture, right? So what does that mean? To me, that means bigger picture. I think into July, August, September, this is still a market that's going to trend lower. That's big picture. I think that's the big picture, meaning we continue to trend lower as long as we're under that weekly 21 EMA. In the short term, however, short term, I think being the next 2 to 3 weeks, I'm seeing a few signs here that we might want to be a little bit careful on the short side. And I think taking consideration to get along the S&Ps here. And I'll show you a few trade ideas as far as credit spreads. But just a few observations, guys. Compare the current structure of the market to the structure back in March. And obviously what happened back in March? The market got oversold. We trapped the shorts and we squeezed the shorts. But more importantly, it's where they squeezed the shorts into. They squeezed them all the way into the weekly 21. And then just as importantly, when did they squeeze the shorts? They squeezed the shorts right into the last quarterly expiration. So last quarterly expiration, I believe, was March 29th. All right, so now take a little bit of the structure. We go from being oversold. We start cranking out a couple closes back above that daily 21 EMA. If you look down here, you see the histogram shifts positive. And then as far as the big three bars go, we go red to yellow. Basically, I lose my daily sell signal. And in the short term, the market goes a little bit neutral. So take that structure back in March. Here we are with a very similar structure. We got oversold. We trapped the shorts. Now you're looking at 1, 2, 3, 4, 5 closes in a row back above the 21 EMA. You've got a positive shift in the histogram. So momentum is starting to shift in the favor of the bulls. And the big three bars have gone from red, bearish, to yellow, which is neutral. And we've got quarterly expiration coming up on June 30th. So call it 1, 2, 3 weeks away. So very similar structure, all kind of taking place at the same time, is back there in March. Back above the 21, shift the histogram, big three, red to yellow, into quarterly expiration. Right, there's one more piece of the puzzle, though. And the last piece of the puzzle here is the volatility index. So make sure you take note of what did VIX do back in March. Come on, VIX, where are you at here? Hang tight, guys. The old Thinkorswim is starting early. Right, but here's VIX back in March. VIX goes green to yellow, right? Bullish to neutral, but it trades under 25. If we can get VIX under 25, along with everything else we just discussed, to me that kind of sets the stage for the same kind of short squeeze into that June 30th quarterly expiration, just like we saw last March. Now, what's interesting about VIX is, in terms of this 25 level, if you look at the overall market into May 4th, and then if you look at the overall market, like the S&Ps, into May 17th, we did see a short squeeze, but the short squeeze has never changed the structure. And you never saw VIX under 25. So the last few attempts here the market's made to really squeeze out the shorts, to an extent they did, but look how hard it fails. Into May 4th, you get a little bit of upside, then the market rolls over. Into the 17th, you get a little bit of upside, but the market rolls over. Didn't shift structure, and no VIX under 25. Didn't shift structure, no VIX under 25. Now we're shifting structure, So I think it all comes down to whether or not the VIX here, guys, can crack and hold under that 25 level, right? And thinking a bit more bigger picture, if this does hold up here, what I would expect is we're going to make a push again, right? Same exact thing as back here in March. I would look for a push up towards the weekly 21 EMA. And for your S&Ps, that lines up around 4,300. So based on all of that, working off of if-then statements, if, of course, this is just my opinion, but if the S&Ps can hold above that 21 EMA, then I think there's a really good chance that A, we hold up, but I think also likely B, that we can squeeze the shorts and rally towards 4,300 into quarterly expiration. Where I think I might be dead wrong on all of that is if the shift of structure here totally reverses. So the reversal of the shift of structure would mean we're back under the daily 21 on a closing basis. The histogram starts to roll over, and instead of breaking under 25, you got VIX over here rallying off of 25. That happens, I think I'm wrong. But if it holds structure here, guys, what I'm thinking is there might be a 2 to 3 week window here, if anything, to try to sell some put credit spreads. Just have the understanding, though, the S&Ps rally into 4,300, chances are anything you're short, it's probably going to rally with the overall market. So for those of you on the call this morning in the mastery, here's the game plan, guys. And, keep in mind, we're in a market where if you're going to swing trade, it's a market where you can come in on Monday with one game plan. Monday afternoon, you might have to change the entire game plan. See, you got to be agile. You got to be flexible. But for those of y'all in the mastery, my game plan this morning, what I'm thinking is let's get rid of the shorts, take the small losses. Let's not worried about, trading around those. And let's just focus on the upside for a few weeks. And I think the easiest trades, at least initially here, would be something for the June 30th expiration. So we already got that big iron condor we talked about in last week's video. But again, just trying to keep it simple, right? If the market closes back under the daily 21, I think it gets ugly. If we can hold above the daily 21, right, this all starts to feel like March, then I think we should sell some put credit spreads. So what I'm thinking here today is something like the June 30th. Right? So we're going to the quarterly expiration, 4,100, 4,090 put credit spread. And we'll see what that's going for here at the open. Just about a 2-to-1 risk reward ratio in terms of the max loss versus the max profit. I think the risk reward is going to be even better if you manage it how I think we should manage it. Sell that put credit spread. And if the S&Ps hold above the daily 21, you do nothing. As long as the S&Ps hold above the mean, you hold your trade, you pocket the premium. Then I think you're inclined to want to close it if the S&Ps start to reverse the structure here. You could look, I think, at the QQQ pretty much with the same idea. Similarities between now and March. Shift of structure, shift of momentum, short squeeze into quarterly expiration. So where this could be frustrating, the market opens up, I take off the couple of short positions, I get long the S&Ps, and then it all falls apart in my face. Well, then it's like, damn, now I'm losing on the long position. I kind of wish I had the shorts, right? Now you're scrambling to get short again. I say this to say that's the kind of market we're in. I think I've got a good game plan here, but 40 minutes after the open, if it all falls apart, I got to be the first one to say, hey guys, this isn't lining up how it should. It can be a little bit uncomfortable trying to swing trade through that. So I do think at the same time, be open-minded to the idea of shorter term trades. So for those of you in the mastery and the options room, I think today I'm going to look to work something, like that put credit spread for the June 30th expiration. But then for conversation's sake, we're going to gap up 1% this morning. So who knows where we open up, but conversation's sake, we gap up this morning. Okay. We're up here at 40.70. For a day trade or for a nice little shorter term trade, look for a dip to, like even your hourly 21. Like something like this, right? You get the strength, you get the pullback, the hourly chart kind of holds structure. you can take that for a day, maybe 2 days. So I think there's opportunity there as well. But really, I think the major thing to focus on here is going to be the S&Ps because, I mean, really, at the end of the day, if this does hold up and we do get the push into quarterly expiration, a little bit tongue-in-cheek, but pretty much everything's going to rally. Meaning pretty much anything you're going to short or that you're currently short probably comes against you a little bit. So that is my game plan, guys, and I do want to show you a few good-looking setups here. So where do we start? We'll start with energy. I still think energy, pretty much until it stops working, I think we're looking to buy every dip. We got the big 3 bars on the daily chart. If you guys look over here to the right-hand corner, we also have them on the 4-hour and the 2-hour. That's pretty solid. Then if you check out something like Valero, which of course is within the energy sector, this bad boy. Buy signals on the daily 4-hour, 2-hour, 1-hour, 30-minute. So you better believe if this comes back this week, or even if I can get a dip to an hourly 21, I think we should look to buy that dip at the hourly 21, especially if the hourly, along with the 30-minute, the 2-hour, the 4-hour, the daily, especially if they're structured as well. So from that perspective, I think Valero, one of the better buy the dip candidates. I think Chevron, this lines up as well. I mean, pretty much anything in energy is going to look pretty good, right? So I think you pick a few you want to buy in a dip. Personally, I like Valero. I like Chevron. I think Chesapeake. That sets up pretty good. So really, anything in energy, just make sure it's got good structure, which most of them do. Then we've got U.S. oil. Now, do I want to jump, to a huge position up here? No, not necessarily. But I do want to be on standby. I want to be ready to buy the dip as long as we have the green big 3 bars on the daily chart and the 2-hour and the 1-hour, the 30-minute, the 15. So if you have a 15-minute buy signal and you're a day trader, call it, you could buy the dip to the 15-minute chart. So this is pretty much, it's the same exact setup that I like on the daily chart. It's just on a lower time frame. Okay? But you're all comfortable with this. Uptrend, positively stacked EMAs, and a squeeze at the 21. Now, it's a 15-minute chart, so you're probably not going to look to ride that wave for 2 to 3 weeks. But just visually pretend this is a daily time frame. It's going to move a little bit quicker. But if you got that buy signal, you're a day trader, you're a short-term trader, you can get busy on these 15 minutes. So I think any dip on USO that fits your standards could be a good buying opportunity. Next up, we got UNG, a little bit of natural gas. And in typical natural gas fashion, it's going to open up around 30.5. So pretty good gap up. But not much more to say. Beautiful trend. Beautiful trend. So energy, natural gas, U.S. oil, and then you do have a few of the utilities, a few of the XLU names. XLU itself, not crazy bullish. I think it's trying to get there. So within this basket, you got names like AEP, American Electric. That's pretty solid. You got Southern Company. Nice daily squeeze. You got your buy signals. So there's a few spots, guys. Utilities, energy, natural gas, and U.S. oil. For the time being, they got the trend, the structure, and the Momo. And then, as far as the short side goes, until proven wrong, I got to respect the fact that the market has been strong enough here to cancel out the sell signal. Last time we saw that was in March. When we saw that in March, we also had quarterly expiration like 2 to 3 weeks away. So the structure, the timing, it's all a little bit suspicious. But that's my game plan, guys. So, in the event that's correct, and we do generally hold above that 21 EMA, or we do rally into 4,300, like for example, I'm short Wells Fargo right now. Guess what's going to happen to Wells Fargo if the S&Ps do what I just said? Best case scenario, being that I'm short, is that it just kind of trades sideways. I got to put debit spread. I really can't afford trade sideways. Worst case scenario, this rallies and turns into a max loss. So going back to what I was saying earlier, this isn't a market where we want to be like, emotionally attached to our trades. I'll be patient with the shorts, but really my thinking is, hey, let's cut them off here. And I got a lot of confidence in the next 2 to 3 weeks here. We can not only cover any losses from the shorts, but also move that ball forward. So a few things for y'all to keep in mind. Shall not be a dull week. Keep an eye on VIX. If we can get VIX under 25, that's where I think for a few weeks, just a few weeks, I think the shorts will feel a little bit of pain. So that's a trade I'm looking for today. SPX, 4,100, 1490, put credit spread. But there's other ways to go about this. If I'm thinking 4,300 is possible, all right, well, maybe we do something like this, a little butterfly action. Maybe we go get our butterfly nets out. 25 bucks wide or something like this. Let me see. All right, little something like this. Cost you about $1. I can risk $100 to make the 2,300. Now it's a butterfly, right? So this turns into a home run if we actually happen to pin directly at 4,300 into quarterly expiration. Personally, I don't know about all that. But you grab that cheap butterfly, even if we just push towards 4,300. Next couple of weeks here, that's a pretty cheap way to take advantage of some upside. What I like about the put credit spread is, yeah, my life's a little bit easier if it does rally. But if I sell the 4,100 puts, I kind of just need the S&Ps to hold structure here. Like, you don't got to blow my mind. You just got to behave. So that's my thoughts, guys. But we got a few minutes here before the open. So if you have any questions, any charts you want to take a look at, we'll take a few minutes here and try to run through as many as possible. Hey, good morning, Mimi. Good morning, Sebastian. Jason, Terry. All right, Matthew, good morning to you. So in terms of Tesla, I do think as a general statement, it's going to move with the overall market. So I'm not too sure about a short just yet. However, at least up to this point, this has not been able to do what the S&Ps, the QQQ, the IWN, the Amazons have been able to do. We've not seen a shift of structure in Tesla. EMAs are still stacked negatively. There's no buy signal in sight. And it's under that daily 21. So I wouldn't short it here because of the structure of the S&Ps. I do think the S&Ps will pull Tesla higher. But what I really wouldn't look to do necessarily is get long Tesla looking for this to be leadership. In terms of structure, kind of like Amazon. How weird is it to see Amazon at 120? Pretty funky. But, look at Amazon. It's not beautiful, but cancels out the sell signals, positive shift. So if I'm looking to play the market with the idea we're going to see a few weeks of upside, I wouldn't go with Tesla. At least not yet. But because of my thought process that the S&Ps could make life uncomfortable for the shorts here, at least for a few weeks, be a little bit patient on the short side. Yeah, Beverly, so I can kind of give you a little bit of a preview here. So this is the indicator we've been working on for the last couple of months. And for those of you that do these calls and stuff, or if you're in the options room, You've seen a few iterations on the charts. I've had arrows, had a few different things. But Beverly, pretty much, just like a quick explanation here, and we'll pull up Valero, and we'll look at it from the bullish perspective. Right, so I've got a list of about 5 or 6 things that have to come together for me to consider, in this instance, a daily chart to fit the bill. Fits that bullish criteria. And a lot of that criteria are a lot of simpler premium indicators. Stacked EMAs, the squeeze, the 10x bars. So it's taking my list of criteria, but then it's taking into consideration multiple time frames. So to keep it simple, I'm only going to get the green big 3 bar on the daily chart when my 6 things on my list are checked off on the weekly and the daily. So I can't get a green bar on my daily chart. I can't get a green daily buy signal unless my weekly chart is picture perfect. So, if you look at Amazon's weekly chart, based on the structure of this weekly chart, negatively stacked EMAs were under the weekly 21. I'm never going to get a daily buy signal until the weekly chart totally shifts. So it's pumping out buy signals based on multiple time frames, based on my list of criteria. And to take it a step further, I'm getting a 30-minute buy signal. So we got the green big 3 bars on the 30-minute chart because both the 30-minute and the hourly fit the bill. So the whole thinking is the cleanest daily trends, the best trades, right? Those daily squeezes that work perfectly, buying the dip to the daily 21, that all works really well when you find that, let's call it pretty daily chart inside of a pretty weekly chart. Right? And it's my thought process that you're going to have your best bullish trades off a 30-minute time frame when it's a 30-minute chart inside of a good-looking hourly chart. So you could look at it as a top-down approach, but you could also look at it the opposite way, kind of from the ground up. So where this can be useful, again, is if you're a shorter-term trader, maybe you like your 15-minute time frames. My argument, so to say, or my belief is, focus on those 15-minute charts inside of those perfect 30-minute time frames. Right? Then you're taking your shots on the 15, but you're doing it within a good structure. And then the same holds true for the sell signals. So Beverly, in typical simpler fashion, we're going to have a few webinars and all that good stuff within the next few weeks. But a little bit of a preview there. So Ty, if you go to the Simpler Trading website and then you go to the Mastery tabs, you'll see the group I'm referring to, the Compound Growth Mastery. What you got here, Ty? XLB, XHB, XHB. Let's check it out. XHB. All right, let's let this format. So for me, and always keep this in mind, guys, like whether you're listening to me, whether you're listening to, John or Henry or Sam, we're giving you our perspective. I don't think the goal necessarily is that we all end up with the same exact perspective. More so kind of take like the approach to it all, the execution, the thought process. So for me, not my setup. And that's kind of the whole pursuit of this indicator. So Sebastian, I see you asking about XEL. Based on my game plan, I made a mistake last week or the week beforehand, jumping into XEL. And this is not to say it's not a good setup, because it is. But as a trader, you want to have your criteria. So for me, the indicator here is just trying to get it to the point where I'm not thinking, right? And getting to the point where all of you can call me out when I'm trading things I shouldn't trade. Doesn't mean you shouldn't trade it, but I got to stick to my guns. So here's a mistake I made a couple weeks ago. I got the group into XEL, and I got the group into Dominion. You'll notice something's missing. Not just recently, but what's missing here? My green candles. And we could talk for an hour about what goes into a green candle, but for me as a trader, that's unacceptable, especially in a group setting. I can deal with doing it on my own, but in a group setting, not acceptable. Because when I jumped into XEL, when I jumped into Dominion, there was US oil with the big three candles setting up. And these are the differences that really start to matter. If I did what I should do, right, trade the setups I should trade, green over yellow, USO would have been the trade. And that's the difference between a small loss and what would have been a max profit. We could have, I shouldn't say we, I should say I should have taken the obvious trade in Valero. Green big three bars. Right? So that was a difference between a losing trade on XEL, a losing trade on Dominion. That would have been money. Right? It could have been XLE, right? Could have been Chevron. So a huge part of the journey as a trader, and I don't think this ever ends, but a huge part of it is getting to that point where on paper, you have your 5 or 6 things that have to line up. What I'm finding is really powerful, and I think subconsciously I've always kind of known this. What's really powerful is when your list of criteria is getting checked off across multiple time frames. That's when things are really lining up. So in terms of XEL or in terms of XHB, it's not to say it's not a good setup. It's not my setup. And without any kind of opinion or emotion, I have to be able to say that about XHB today and then be all over this damn thing as soon as that changes. So again, it's not that we all have to think the same way or trade the same setups, but get to that same point where whether you're using an indicator or just doing the work yourself, you pull up a chart, random chart, Johnson & Johnson. 1/10 of a second, not getting long. Like zero thought process, just not going to get long. I'll play Johnson & Johnson long all freaking day when I got the pretty green bars. What am I going to do with, what would I do with Disney? Not going long. If anything, I'm going to short it. So an indicator can make it helpful. But admittedly, had I taken the few extra minutes to really look at XEL, really kind of go through that with a fine-tooth comb, I would have come to the conclusion, based on my checklist, this was like a B+. And without getting into the specifics, there's just some momentum lacking here for now. It has trend, it has structure, not enough Momo. Valero's got the Momo. UNG's got the Momo. So food for thought there, guys. Food for thought. Hey, what's up, Brian? Always good to see you, man. Yeah, AEP. Now, here's the other thing, right? Maybe I take AEP, that falls apart, and, XEL works out. That's going to happen. You want to think more so in terms of like, hey, my next 500 trades, what do I really want to focus on? A little bit of that mindset. Hey, good morning, Merrill. TG01, good morning. Ooh, second favorite indicator. I tell you what, maybe a little bit biased here. These big three bars are my favorite indicator now. And I say that with all the respect in the world towards Simpler because, one, this is, of course, their indicator. They built it. But two, it's based off of the squeeze. It's based off of the 10x bars. It's based off of the stacked DMAs. a lot of the things that Simpler's created, and a lot of the things that I think a lot of us learned reading John's book, right? A lot of mastering the trade principles. So this would be my favorite indicator, with the Squeeze Pro being second. However, this indicator is a byproduct of all of Simpler's work. So they kind of go hand in hand. But all right, guys, I think I'm caught up on the questions here. We've got about 14 minutes left before the cash session, and my fiance hit the road for a vacation this morning, so it's just me and the dog. So I am on dog dad duty. But listen, guys, I appreciate you joining in here. Yeah, and for those of you, who want to learn more about the indicator, and we got to do a few tweaks. All right, the tree is up. We just got to decorate it, so to say. But I will keep you guys posted in terms of the webinars and all that good stuff. But with that being said, my friends, I appreciate being here early on a Monday morning. I hope you get a little bit better at your craft this week, and I'll be back on Wednesday, and we'll pick up where we left off. Talk to you guys soon. Thank you.